They're rolling.
Okay, that sounds great. What would you like to do?
I think we're recording here, so hopefully
Great.
we will be good. So let's just tee it up. I've got the screen up here. I'm honored to be joined by my longtime friend Daryl Crate, CEO of Easterly, announcing earnings earlier this week. Congrats on getting another quarter under your belt. For those that don't know, Easterly is basically one of the primary landlords of the U.S. government. As of their most recent quarterly report, 102 operating properties, over 10 million square feet of space, 92 leased to government agencies, 4 to private tenants. They also got 4 properties in development, which we will get into. Here's a sample list of some of their tenants. Very timely with what we got going on with the shutdown. I know you spent a lot of time on the call highlighting the relationship with the tenants. This slide here talks about their investment strategy. This has been tried and true. It's something they've been doing for a long, long time. This is all information directly from their investor presentation. They've got a really good screenshot here of their portfolio, also looking at their geographic footprint. And they also talk about their various slides here, excuse me, the slice of the pie, looking at the tenant makeup. So with that, why don't we jump into a little dialogue back and forth type of thing, questions type of stuff? Very simple. You guys updated your core 2025 guidance. You've established 26 guidance. Before you go into that, you spent a lot of time on the call, both in your script as well as the Q&A with the analysts, looking at your 2 to 3% growth outlook, coupled with trying to delever a little bit. Now, secondarily, if you recall one of our last conversations, we had a nice little webinar that we did, and a couple of days later, you cut the dividend. So we'll address the dividend as well. But I was wondering if you could maybe walk us through some of this guidance update, because you're the first REIT that's established 2026 guidance. So way to be the first
Wow.
guy out there. Maybe walk us through some of the steps, the keys to FFO growth, looking at the rest of this year and beyond.
Yeah. Well, David, it's great to be with you. Really, really appreciate it. And as we look to 2026 and finishing up 2025, it's really an exciting time to be at Easterly. I think our guidance absolutely shows the consistency that's in our business model. If I didn't say it once, I said it 1,000 times on the call that we're growing between 2 and 3%. Our earnings for 2025 at the midpoint, show a 3% FFO growth off of 2024, and we delivered similar performance last year. So it's been very exciting as we expand our strategy to include state and local and high tenancy credit, as we continue to be able to deploy capital in a very accretive way. We look forward to 2026 and have every opportunity to continue that long-term growth that we've stated. We'll also be expanding and continue to expand into those high credit state and local government tenants, and continue to find value, from our existing strategy. So we're very excited to provide the guidance. We think growing 3% a year is very attractive, and with an exciting dividend, which I'm sure we'll talk about. That growth plus dividend makes the stock very compelling at this time.
Around the last conversation, as well as when Doge started trickling through, and there was concerns about how Doge could impact both you at the company level as well as your underlying tenants. So any new updates that you could talk about? Obviously, I know you've addressed this on the call, but what can you talk to us about Doge? What do you think is the future outlook of government properties? And do you think that further cuts and layoffs will potentially impact your business? Oh, by the way, don't forget, we're also close to day 30 of a government shutdown as well. Something new, a new wrinkle.
We've been very excited about Doge from the beginning. I think it's unfortunate that we cut our dividend, and some people misinterpreted that as a sense that Doge was a challenge for us. In fact, it's an opportunity to start retaining more capital, because while the world imagines Doge could be difficult for landlords like us, it's actually an enormous opportunity, because the government is pledging to be more efficient. It's never going to get there, but it's going to continue to work to find better solutions. And one of those solutions is working with public-private partnerships. The buildings that we maintain for the US government are much better than the buildings that they maintain for themselves. They know this. I've spent a lot of time with folks at the GSA. And as you see in the testimony of the folks who are just about to get confirmed to come into the GSA, they understand that as a government tenant, they can demand things from a landlord, and we know how to deliver them for less. And if you look at the buildings that the government owns, they have over $80 billion of deferred maintenance because they don't maintain the roof. They don't take care of things because it's not what they do. Their job is to intercede drugs, it's to protect the nation, it's to do things which have nothing to do with maintaining real estate. So we believe Doge, Doge and just the sentiment of Doge and government's a real tailwind for what we do because we love being a chosen partner of the US government.
With this current shutdown, how would you say you're preparing for further changes across the government properties landscape? Are you maybe talking to reps about purchasing properties that could be fully occupied or have the potential to be fully occupied?
Yeah, I mean, what we're seeing is, with this shutdown, we're seeing how government, does look at its priorities, of course. But most importantly, I mean, think when folks think about shutdown, they think about the credit worthiness and will we get paid? I just want to banish any sensibility around that, which is these are dollars that are already appropriated, and the rent payments that we get from the United States government are just as certified as your dollar bill. They're all backed by the full faith and credit of the United States. There's no way the U.S. government's going to default, on rent payments because it would be tantamount to defaulting on a government security, and that's not what's going to happen. This is all part of partisan budget wrangling, and they will get that resolved. As we look to properties going forward, we see the areas where government has a priority, and we align ourselves with each of the agencies that are providing an enduring mission, to protect the American people, and that includes the Veterans Administration, the Drug Enforcement Administration, the FBI, areas that are critical to protecting the United States, and are also areas where the resources there need to grow as our population grows. So as we look out over the next 5, 10, 20 years, we see that these are agencies that are going to continue to develop, and we want to make sure we have the facilities in place so that they can execute their mission each and every day.
So when are you going to get that mission critical tattoo on your arm there? How many times a day do you talk about mission critical? Um, one My next question talks about how you position in the current environment. Do you focus on development opportunities? And I was reading about it wasn't a development, but you acquired this York property, and I think you said you got it an 11 cap rate. Did I read that correctly?
Yeah, it's
Like,
York Space Systems. It's in Colorado. For us, it's very attractive because we own some other buildings in that area. So our ability to maintain that, understand the asset, and grow, I think we're going to be able to get an 11 cap asset out of it, which is terrific. York is part of defense and aerospace. There's a center of excellence, in Colorado for space activity. So it's located in just the right space. York is doing a terrific job building satellites and other projects that are going to keep America safe. And we're really excited to be their landlord because much of what they need from their landlord at their facility is exactly what the FBI needs and many other the folks that are either in law enforcement or in the defense industry. So we're really excited to be York's partner, and we're really excited to see them grow with the U.S. government.
let's expand on this a little bit more because you spent a bunch of the time in the call talking about shifting more from a national focus to the state and local focus. Um, Maybe talk about how that how that pie is shifting or evolving,
Sure.
and really at the local level, what is the real opportunity that you see? And is it looking at top 50 MSAs, top 100 MSAs, the suburbs of those top 50s? But how can somebody think about how this evolves over the next few years closer towards the state and local level?
Yeah, I mean, so a couple things to think about are one, what's the character of the leases? Many of those leases have escalators in them. As you well know, our U.S. government leases, many of them are flat. They're flat leases for 10, 15, 20 years. And what the public markets want are growth. So to the degree to which we can take 30% of our portfolio and take that 30% and invest it in state and local buildings where they have escalators that could be 2%. Well, 2% times 30% is 60 basis points. And that means we start the year anticipating that there'll be 60 basis points of growth if we do nothing. In the public markets, given our core ability to grow, let's say 2 to 3% as we build that portfolio, we'll be getting our growth rate, into 2 3/4 up to 3.5% growth rate, which makes it enormously attractive, as compared to other REITs, especially since the credit worthiness of our tenants is better than any other REIT in the United States. So as we look at moving that forward, those state and local tenancies are exactly, we have the same service profile for those buildings as we do for our government buildings. We understand what the tenant needs. So it's an opportunity for us to change the growth profile of the cash flows from our company, while also taking the knowledge that we've built over the last decade in working with governments, being a good partner. We can do that with state and local. And if you see some examples, the Wade County is probably the most municipal building that we bought down in North Carolina. It's a AAA county. It's one of the fastest growing, if not the fastest growing community in the United States. And we're supporting what's essentially the core building that supports their education in that county. They house all the superintendents there, and that is it's a terrific building for us.
You spent some time, and this is a very interesting topic that you highlighted that I think a lot of people in the REIT industry don't realize. It's all about relationships. And one of the key relationships that you didn't go much in depth of, but you briefly talked about, was sovereign wealth. Looking at the time frame that sovereign wealth funds invest in properties, they don't care about what's happening tomorrow. It's 10, 20, 30 years down the road. So looking at that relationship with your tenants, without speaking for the Swifts, what are the Swifts thinking about, your thoughts about, again, the state and local development or growth prospect as your capital partner potentially to grow this platform?
Yeah, well, you're asking, it's a terrific question because, it cuts down to the core taste and preference of sovereign wealth, which is a weighted average lease term. Just as you're pointing out, they don't care about what's happening tomorrow or next week, but where are we in 10 years? And so for them, being able to buy a lease that is 20, 30, even 40 years at a state level is very attractive. They understand the value that's in that lease, and that is their investment horizon. So I think they can be an outstanding partner to us, as we grow that part of our business. And they like the growth too. So we're able to put capital to work, and I think we're going to deliver a nice return for our JV partners, as well as our equity investors.
So we do know that a lot of folks have focused on you guys with the dividend story. We had a dividend cut that's in the rearview mirror, hopefully. Let's talk about current coverage and safety.
Right.
And more importantly, looking at your 2 to 3% growth, as you've been talking about, coupled with deleveraging and some of this other ideas, what do we need to get that dividend to grow again? What components need to fall in place to get the dividend to go back
look,
up?
I think the growth that we're achieving now allows for a growing dividend. In that way, I think we're positioned in a way that's appropriate. Today we have 65% dividend coverage. We're very excited. We've got one of the largest pipelines of opportunity that we've ever had in the company's history. It's about $1.5 billion. We're going to work with JV partners as well as hopefully equity investors, give us a little bit better cost of capital in order to create that growth. And with growth, we're in a terrific position, given where the dividend is today, to start that growth.
So like I said, we're close to day 30 of the shutdown. We got trade tariff chatter happening every single day. A lame duck Fed chair on his way out. We've got Fed governors that are pushing for extremes. Let's cut 50 basis points. Let's not cut anything. We've got all sorts of factors that, literally things that are beyond your control being fired at us every single day. So besides the alpacas on the farm, what's keeping you up at night these days?
I think we're just really excited to be able to get this capital put to work. We've put together a terrific pipeline, and actually this volatility is terrific. I mean, the differentiation of opinion and the conversations that are happening out there, folks are going to see that what we do is just steady. Because what we're doing is helping the government do their key work, which is providing, again, safety, security for the American people. And as I look forward, I think we've got the capital structure, the business positioned properly. We've signaled that we can grow and delever a bit over time. Leverage is the only metric that we have when we look at other firms that where we're not exactly where we need to be, from a financial profile. And we know our credit tendencies better than anybody else. But so if we can get to that place, if you run the comps, you can see that the stock, should be $28 to $32. And if we continue to grow with just that other, 40, 50 basis points, we start comping it at levels that are higher than that. So the stock's really inexpensive right now. I'm excited for folks to see it. And they're going to, as we continue to execute on the expectations that we set on this call and the calls going forward.
So maybe to put a nice little bow on this, because I always ask, why your company? So why Easterly? But more importantly, what's the value proposition in 26 and beyond? Because look, basically come next week, 2 weeks, we turn the page on the year. I'll see you here in a couple of weeks in Dallas for NAREIT, and we're on to 26. So what is the value proposition for 2026 and beyond looking at Easterly?
So today, the great news is that the opportunity for us to grow is tremendous. I mean, you look at just stock price appreciation. I think that we're poised for greater growth in stock price than 90% of the folks that are out there. I just can't think of the other 10, but I give some people a little room. And if and I would say to an investor who's making a choice, you get an 8% dividend to just watch us do what we're doing. Spend some time learning about the company, see what we do, check out our buildings, give us a call, and we're happy to show you what we're up to. And if you had an ability to tour our buildings, see what we do, you'd be really proud of what we're doing for the American people. You'd see that our tenancies are going to be long, and that we've got some terrific growth and cash flow that's on its way. And you're going to get paid to watch the show. So it's exciting time, and I'm excited to see you, David, in Dallas not too soon.
One thing to commend your guys on is accessibility of investor relations. And I always educate, the REIT community about how approachable REIT IR departments are, that they are here to work with you, chat with you, educate you about what's going on at these companies. Try to call NVIDIA, Apple, one of these, big mega cap bellwethers. Good luck trying to get somebody on the phone, let alone try to talk to one of the C-suite executives. And I don't think a lot of people realize how approachable a lot of our management teams are to ask those questions. With that, if there's any audience questions, I'm happy to open up audience Q&A here if there's anybody that would like to throw something out at Daryl. And should there not be any audience Q&A, I do want to thank you for, catching us up on what is new, because frankly, office is a landscape that seems to be changing every single day. And yet, I don't think we're going to be closing up the FBI anytime soon. I don't think the TSA is going away anytime soon. And so, the safety and stability of your tenant base, regardless of government shutdowns or not, sure does make folks, should be able to sleep well at night with that.
It's a great anchor to a portfolio. We're really excited about what we do, and you're right. What we do is wake up every day trying to make our portfolio strong for the folks who have invested in our business.
We have one quick question here. So any pipeline in terms of unmanned programs?
Yeah. So it's a great question, because as we're looking to grow in government adjacent business, the places that we look in, aerospace and defense, are key. And it's no doubt that the government's relooking at how unmanned aircraft are going to work, how drones are going to work. And we're going to certainly try to align ourselves with companies, that are part of that growth, because with growth, it leads to tenant stability, it leads to increased credit, and it's a great opportunity for us to support mission critical business.
So Scott's question actually poses another good question. How is AI impacting you guys? How does ChatGPT impact
Oh my God,
Easterly both?
I think it can help our cost structure. You know, I just before this call, I'm just going to get into the weeds, but we have some terrific AI that we're developing internally that allows us to take, crazy enough, a tremendous amount of data from our facilities, and then it enables our accounting teams to work through each of these buildings, spot variances very quickly, and allow us also for that to translate quickly into the corporate model. So as we're looking forward to understand, you know, what's the envelope of growth opportunity for the REIT, we can do all sorts of what if scenarios, and we can see, you know, what our business is doing today. We don't have to wait to the end of the quarter. We don't have to wait for a utility bill. We have almost real-time data, you know, with regard to how the portfolio is performing, and that can only mean to lead to better decisions and seeing opportunities faster.
Well, I can tell you that Navy won't be as fun as Vegas was last year with you and the team. I know our little Anatol will have to suffice here in a couple of weeks, but I'm really looking forward to catching up with you and the team in person here. We always have a good time together, and I can't thank you enough for taking time out of your post-busy earnings schedule to spend a few minutes chatting with us.
Well, great to be with you. You take care, David, and we'll see you soon.
Thanks,
All the
Daryl. Good
best.
seeing you.
Okay, bye-bye.
Bye-bye.